Good morning, traders. Today is the 27th of September. My name is Neville Hornsey, market analyst for YouTrading. And today I'm joined by
Joel Frank, also market analyst for YouTrading.
How are you doing? I didn't actually ask how your weekend was. How are you doing?
Yeah, I'm good, mate. I mean, it's good to finally be back again after a couple of weeks. I've been missing these podcasts, but I've got good Wi-Fi again.
Yeah.
Moved into some new digs over the weekend, so that was a bit stressful. But what about you, mate? How have you been getting on?
Yeah, I went out for a run today. I kicked nature in the ghoulies. It was just absolute stormy, but now it's bright blue sky, so I was invigorated. I had wedding anniversary, all sorts of things this weekend. So I've been like,
nice.
Yeah, so I've just been super positive, which is lovely.
Good. Should we take it to a negative?
Yes.
What about this panic fuel buying in the UK?
Yeah, I'm going straight to the charts because I think it deserves a chart. I don't know what's going on there. But
we can start with oil, I guess, if we're talking about panic fuel buying.
All right. So I was going to say to you, like, when you've got enough money, there's nothing better than going to a petrol station and just filling up your tank until you hear the click. Like, when you're not having to worry about it. Like, you just think, okay, I've got enough money in the bank. I'm sorted for the rest of the week, month, for food and stuff. And I can just fill this up. And that's like a really good, positive feeling when you know you've got enough money. Because I remember being like, 18, whatever, and just going, I've only got a fiver. I need to get, just dribbling bits of fuel into my car and stuff. And it's just, but obviously people live like that on a daily, weekly, monthly, yearly basis. Like, they have only enough money to get a tiny bit of petrol, but they actually probably need that car and that petrol or that fuel more than anybody else. Like, cause they need to get around and do stuff. So these people that are just filling up their tank, like, and then having the car probably sat on the driveway for half the week as well. It's so annoying. But I'm also annoyed that there was obviously mention of like BP were the first that I realized said, we can't get our drivers to the petrol stations. It should have been at that moment that all the petrol stations just ration fuel. I just think because obviously our society is just geared up for like panicking. We've seen it too often now. So
I know. And the annoying thing is, it's like, it's not even like we don't have enough fuel. There's not a fuel shortage. We don't need to worry about that at all. It's just, there's some disruption to the supply chain that delivers the fuel to the actual stations where it then gets distributed. Yeah. And I don't think before this surge of panic and panic buying, I don't think there was actually any sign that there was going to be any widespread shortage at the pumps. I mean, It was literally just because the media just pounced on all these stories about, literally, it was a couple of gas stations were running out. That was it. A couple. Yeah. Then it just the panic obviously is causing problems.
But it started with obviously kids have gone back to school. What we're going to talk about, obviously COVID's getting quite boring now. Christmas is coming. Yeah. There's not enough CO2 in the world to like kill all the turkeys or like package of food, or there's not enough of this, like the gas prices are obviously going up, and then the energy companies are going to the wall because of government.
Do you find there's a slight irony that we've got all the environmentalist movement is the crux of their thing is we're releasing too much CO2 into the atmosphere, and we're destroying the planet that way. And then all of a sudden we're running out of CO2. It's a bit like, oh dear.
Yeah. No, I find
collect some of that CO2.
No, but I find, all right, so I totally agree that it'd be lovely if humans were able to protect the environment. I went out in the environment today, and the environment can sort itself out as soon as humans stop messing about. It's just really powerful and very awesome when it's like destructive or, creative. But at the same time, what sort of society do we want? Because, we need to come up with better ideas than just saying use your car less, because when we do run out of petrol or fuel eventually, we won't have plastics. We won't have, everything I'm looking at, like I'm probably wearing like most of it as well. Like all this stuff that comes out of the ground does get used. I just think we need to find better ways of dealing with crises. Because as soon as we lose the power to fill up a tank or get food to the shops and stuff. It's just, I don't think our society has got many weeks in it before we become uncivil. I think it would only take a couple of months of real hardship before people start turning on each other. It's just.
Oh yeah, definitely. I mean, not that it. It's a bit of a fantasy world, this, but I've been watching The Walking Dead, and it's all about how society collapses because of a zombie outbreak. But
but it could be anything. You know, whether it's zombie, COVID, just general. Because I was in the pub and it was a birthday party and it was like lovely, and the guy said, like, see, anyone that voted for Brexit, this is like all your fault, sort of thing. You know, like, you know, no European drivers, you know, no food in the thing, no petrol, blah, blah, you know, it's Brexit. And I said, hang on. I was reading an article where the guy who was an ex-lorry driver was like, you know, if you want me to get back in my lorry, you need to start allowing me to come into your like towns and cities. You know, you need to give me like adequate parking so I can just park up and have a rest, you know, when I've done my however many hours I'm allowed to do. You know, you need to give me facilities on the motorway where I can park up for free, have a shower, get a good meal. You know, our society is like basically pushing like these lorries out, you know, like, no, we don't want you. We don't want you. And it's just like, you know, and a European driver might do it for half the money as well. So, you know, if it's costing a guy more to do his job and it's such a hassle and nobody likes him and he gets abused, why would he do it? Like, well, why would she do it? Yeah.
I think, I've heard a lot of similar things. I think you're hitting the nail on the head, to be honest. Brexit is contributing to this shortage of drivers, but probably the pandemic's been a bigger issue because a lot of the foreign drivers, like you said, who we relied on, who would put up with the bad conditions where British people wouldn't, a lot of them have gone home because of the pandemic. So it's not just about Brexit. And I mean, it's not, the other way we know it's not just about Brexit is because the UK is not the only country facing these shortages. No. There's a lot of high wage countries like Germany and other Northern European countries that have also seen exodus of their own lorry drivers. I think even New Zealand is got a shortage. So
well, they've only got a certain amount of people on the island. They've only got a certain amount of people on the island. They haven't got like massive resources of humans, you know. It's just. But then I was talking to another guy who's in manufacturing, and he makes like seriously like high end gearboxes for like performance cars. And he said like getting components is an absolute nightmare, like because we've heard about the supply chain disruptions and bottlenecks. Yeah, and he says it's not the fact that there's not enough people like driving; it's the fact that there's not enough people making the bits now, the widgets, the things, because you can get more money as a driver, like to deliver that box of goods is actually better paid than the person that actually made the goods. So there's like a whole shift of people moving around, you know, like filling, you know, if you heard that you could get twice as much money and you've got a HGV4 license or something, you're going to go and do that because why wouldn't you make more money? It's just...
You know what? I've seen I've been reading, a lot of economists have been talking about this. A couple of them, I can't remember who exactly, but they've explained a lot of the crux of what's behind all of this sort of supply issues and stuff that we're all suffering from globally. It's talking about the fact that the pandemic seriously disrupted global supply chains. But at the same time, governments all across the world and central banks, they stimulated demand massively stimulated demand. So if you look at demand, where it is now, it's probably higher right now than where it would have been had there not been a pandemic, because all the stimulus has been so strong. But supply in a lot of these manufacturing industries and just supply chains in general are still substantially weaker than where they were prior to the pandemic. So there's this big like mismatch in the global economy at the moment where demand is like ridiculously strong, or it has been. It's cooling off now, but it has been ridiculously strong. And supply chains are just like, can't keep up.
Yeah, that's like when I was doing the research into the chips, the microchips and stuff. It's like, what the hell is going on? Like, obviously there's a few key places where microchips are made, and obviously secondhand cars and, you know, new cars are all being... Everything's been affected by microchips because it's in everything. That's the Internet of Things now, isn't it? And it was the case of like pandemic hit, global shutdown, all the orders for everything that we buy got cancelled because everyone thought no one's going to have any money, no one's going to buy anything.
Yeah.
Then to gear that back up when everyone realized, oh, I need a laptop, oh, I need a webcam, oh, I need I just need stuff. It's
So
just like,
true.
everyone was
I
like,
can't spend my money in restaurants anymore. I can't spend my money on experiences, flights. Let's spend it on stuff.
Yeah, no, and that's it. But the people that were like putting orders in for, chips for my iPhones, chips for, whatever, chips for everything, all those orders, will get like cancelled because everyone just thought it's a global shutdown. Like no one's going to buy anything. No one's got any money. But and I think the reports about, obviously the governments, should I say, could have said, right, this is our plan. We're going to shut this industry down, support them. Everyone's going to work from home. We're going to give people stimulus. That's going to, someone should be able to foresee the future of what might be needed and who may have needed direct help. But they didn't do that. They just shut things down, didn't they? Because they were like too worried about the actual immediate threat.
Didn't expect it, panicked, I think is the way to. But the thing is, with the benefit of hindsight, you can always say, oh, would have done this, would have done this.
But it turns out that they had a plan. They had a plan for what happens in a pandemic, but they just kind of just went and threw it away.
Oh, It had a pandemic, but had a plan, but it didn't include lockdown because they didn't believe the British people would accept lockdown because we're a democracy. Yeah. But then they saw them doing the lockdown in Italy and Spain, following on from the lockdown in China, and they went, oh, well, we can lock down. Let's just rip up the rule book and do a lockdown. But
so I reckon this is a one-off event in terms of the next time a COVID-y type thing happens. And we all accept that, we should lock down if we don't understand the disease itself until, we do understand it and then we can deal with it. Yeah. But I just can't see this problem reoccurring. Once we get through it, they must be like writing all this down. Like we're never doing that again. We're never we have to do this next time. Because,
you'd hope so. But the problem is like governments change and you get people coming in who might be incompetent and might not have taken those notes that you're talking about. And people have short memories and I don't know.
But like, but the energy prices, before.
Yeah, let's talk about markets. We're just ranting.
But before all of this, like fuel shortage, not shortage, it was like every inflation report that was coming from a central bank was saying, oh, due to high energy prices, inflation is like over the, norm. And now look what they've done. They've just like pumped it right up. It's like 1, 2, 3, 4 days of just, going up when it could have potentially found supply and come back down because OPEC could put some more money.
I mean, the thing is, when they're talking about energy prices, they're not just talking about crude oil prices. They're talking about other, gas prices, basically. Yeah. Gas prices have been on an absolute tear recently in Europe and around the world. And that supports crude oil demand inadvertently because like utility suppliers, I don't know how all the economics behind their decision making goes, but like as gas prices get to extreme levels, they might switch over to using oil. In some instances, it might become more economical for them. So that is a form of like added demand. But then I think there's a couple of other things as well, like OPEC is slowly increasing output, but we've had this surprise disruption to the Gulf of Mexico because of that hurricane earlier on. Or
there's a couple, wasn't there? Like Nicholas,
early September.
What's her name?
Ida was the big one, and then Nicholas didn't help. And those supply outages are still actually quite large. They're still bigger than what OPEC is now bringing onto the market. So this whole thing, underlying thing, where you have global demand for oil is currently higher than the global supply of oil. That still remains in oil's favour. And then obviously the scenes that we're seeing on the roads in the UK with these traffic jams outside petrol stations, that's all feeding to it as well. Although I think that's probably going to be more short term. But I don't know. I think we're seeing these key levels broken. Brent's at multi-month highs.
Right. I just like
bullish.
I was just thinking about a conversation I had and a report around
Tesla.
Tesla. Anybody that I said to my sister, I said, "Oh, you're out for petrol." She just had a baby, like just recently, like last week.
Yeah.
I said, "You got enough?" Like, and she goes, "Oh, it's all right. I've got an electric car." I was like, "Oh yeah, Tesla's going to go up." Just like everyone's going to go try and order a Tesla now. It's just like, oh my god.
You know what? I wonder if there is some kind of loose connection between electric vehicle stock prices and like gas prices.
I reckon
There must be. There must be some. I've never seen any analysis done on that, but there might be.
Oh no, because like buying an electric car wasn't a thing like a couple of years ago. Really, it'd be like, oh, I've got a hybrid, I've got this, I've got that.
Yeah.
But like trying to park around our way is getting quite hard now because the amount of electric sort of spots, people, they're taking up road space to like so you can park your car and charge up, and then there'll be roadside furniture essentially. Just
is that the ultimate gentrification?
Well, I said before it was like you call your area a village, so it'd be like Walthamstow Village, it'd be like Vicky Park, whatever village it was. Now it's just like how many electric points you got in your street. I reckon that's like it's not hanging baskets anymore. It's like how many can you electrify your car? But I think it's just weird, isn't it, how things sort of get pushed. Like I didn't think we'd all be sat at home or like working from home essentially, a couple of years ago, but that's happening now. I think this could push people towards like they don't want to have to worry about getting diesel and gas and stuff. They just think, well, I'll just plug it into the wall and drive my car. So I think this kind of thing pushes people's attitudes.
Certainly. The pandemic has accelerated some of the changes that we were seeing, but it made them happen 10 years of changes in 2 years.
Yeah, no, exactly. Yeah. And I guess like with the markets themselves, I was talking about, say the S&P, like you had 2008, the great financial crash and stuff like that into 2009. It was a good, from say the peak in 2007 to the crash bottom in 2009. So that's 2 years where you had like COVID, which was like 2 months.
I know.
It's like everything is getting like they're throwing trillions of dollars at things now. They're speeding things up. Everything happens exactly the same as it used to, just like amplified. Well, I think the main reason behind the much faster recovery in stock prices, that kind of mirrors the much faster recovery from that initial recession in 2020 that we've seen in the economy as well. Because I think the thing was the fiscal and monetary response this time has been very forceful, because you've had, the people that they're very much into Keynesian style economics, where they're like the demand management, the government and through the central bank and through fiscal policy should do demand management like really, really forcefully. And they've really been forceful, and that's helped the recovery in the stock prices like massively. Yeah. But the central banks would like come to, I don't know, March 2020 and just say, we can do this much, but it's going to take fiscal. Like there has to be some sort of fiscal response, and it has to be big. So
exactly.
I think everyone's kind of cottoned on that. Yeah, putting money into the economy directly rather than just sort of shifting some bank reserves around to like give because like central banks are basically forward guidance and confidence. They say like we can do this. We'll look after you. Don't worry. And then they don't buy the stock market. We buy the stock market, or pension funds buy, thinking, all right, the Fed's got our back or ECB's got our back. But when you've actually got a government going, all right, here's like the CARES Act, have like, I don't even know, I've forgotten how many trillions of dollars it has.
How many trillions? It was like 5 trillion or something crazy.
Now they're going to be voting on, what did we say on Thursday? They're going to be voting
they're doing the bipartisan infrastructure package, which is about $1 trillion, I think.
Because it was going to be bigger than that, but they've sort of paired it, and it's going to be like up to about $1 trillion of new money, because there was some earmarked
of new money. Yes. Although it's they're trying to fund more of the spending packages now through new taxes.
Yeah.
So the stimulative like effect of all these fiscal packages that we're going to be hearing about are not quite what we've seen over the last like 18 months, because if it's going to be funded by new taxation, then it's not really it's more just moving money from one place to another, rather than borrowing new money. Yeah. But I mean, Washington, we need to watch what happens in Washington this week, because I think more importantly than this bipartisan infrastructure bill is, can the US avert a government shutdown in the coming months? I mean, they're all kind of tied together because it's all this political wrangling that goes on there. But can a government shutdown be avoided is one of the key hurdles for the US in the next couple of weeks. I think the market's base case is that it probably will be averted.
But it has been in the past. I mean, they do like shut down, and, you know, park keepers and federal building managers, you know, lose out on some money for a bit, don't they? And pensions lose out.
Yeah.
But they do kind of get it back, and get it all up and running again, don't they?
Yeah. So what are you thinking technically then for the S&P 100?
Well, I guess I was trying to sort of work out the sort of ranges, like when it moves 150 points, what happens? Well, it seems to move 150 points off a reversal and then a bit of a pullback. So every time there's like a big reversal off that sort of 50-day EMA or, you know, whatever it was, you know, it used to move 150 points. And then we broke structure and it went down 150 points, but it's recovered. And I don't know if that was essentially, I mean, I did like a big thing about the banks being full of reserves, and you know, there's not this reserve drain where they can normally buy treasuries and stuff. So they've got these big reserves, which means they have to sell things to get capital, which, you know, could be equities, it could be derivatives. So I had this thing where everybody was like looking at the 50-day moving average on the S&P and obviously buying the dip. And I thought maybe the banks used the Evergrande sort of bearishness to like sell into the guys that bought the dip. But then
to break the stops essentially.
But then obviously once you go past that buy the dip sort of moment, it's actually, oh no, you know, there's like a sell-off. So, I mean, I don't know if they, you know, because if you sell, someone's got to buy. Someone's buying all the time when you're selling.
Yeah.
So like, I just imagine that the banks could have used that sort of buy the dip event to get rid of a load of stuff. And then they got an acceleration because of Evergrande. Because everything I was reading was like, yeah, it's a big problem for China, potentially. But the Chinese authorities were like, no, this is like the plan. All these companies that are like over leveraged have got to stop doing that. And
it's just one of those things where it's a bit of short-term pain for some long-term gain. That's the way the Chinese authorities see it. And in terms of like for global markets, I think a consensus is sort of building behind the view that if Evergrande collapses, which it looks like it kind of will in a way, however, a kind of managed collapse, whatever they do with it in China. But the global implications aren't going to be too severe. Like European and US banks aren't massively exposed. No. So it was a storm in a teacup. I saw a couple of people saying, I think, which I probably agree with. So that's helped facilitate this rebound, I think. Yeah. So partially.
I think like once the banks, like just say like, because I don't know, I'm not in a bank, like, but if it was the bankers selling some stuff, like obviously that happened, then that Evergrande story is kind of sort of plateaued and then maybe coming back on the other side now. And there's still a lot of money going in, you know, from the stimulus from before and the sort of amount of spending, and confidence is like, you know, maybe we can get back up, but technically, yes, we've done the V-shape sort of rebound, but until we get a new high now, I'm not overly confident. I'm not particularly going to be buying and holding at the moment.
I mean, the attractive levels were this time last week.
This is kind of like no man's land at the moment. This is like a return to a broken trend line. This is a return to the middle of the range. It's just in between. And I think they're going to hold it here until they know what that infrastructure bill and all the other sort of lockdown stuff, the government shutdown, I think they hold it here. So,
think another key factor, Nev, is like imagine last Wednesday's FOMC meeting was more hawkish than people expected.
Yeah.
But we still saw stocks continue in this recovery from the recent lows, which I was a bit surprised by that, to be honest. I think a lot of people were surprised by that. Do we start to see hawkish, because we've got a lot of Fed speak this week, do we start to see hawkish vibes from the Fed weighing on stocks, or is it already in the price? I mean, I don't know.
I think at these levels, I started to feel that it's going to be one of those sort of situations where before it might be bad news is good news type of thing. But like when you've got an actual economy that has recovered and the speak is, what we're doing isn't actually that effective anymore because the economy is so strong, it can kind of look after itself. Yeah. That's kind of like, well, if we've got a strong economy, why should we sell? just like keep, it's supposed to be a reflection of a strong economy, like a rising index. So I think you might be striking the point, which is actually what drove the market. Maybe the markets looked at the more hawkish Fed and said, you know what, we feel like this slightly more hawkish stance is appropriate because they're right. The economy is strong and it is on a good trajectory. Yeah. I don't know what they're going to do about inflation now. I think now it's kind of, obviously prices are rising and it doesn't look like, I can't see any sort of deflator of, we've got higher energy prices. We've still got massive supply chain disruptions, and they seem to be like the cause of the rising inflation. And if they're not going away, I mean, at what point is it not transitory? Yes, it could be transitory because of certain things, but if those certain things don't disappear.
Yeah, it's not. I think we all know it's not transitory inflation. I mean, the thing is, like, do you remember when the Fed first announced its new average inflation target in policy? Yeah. That was like a year ago. Yeah. And there were Fed members that were being asked, like, how much of an overshoot would you be willing to tolerate? Because they were talking about how they'd be willing to tolerate an inflation overshoot. And you had people talking about how, maybe we'd let inflation go to 3% for 6 months. Yeah. You know what I mean? So that gives you an idea. We've done that. We have done that like well more. We're gonna have to see where inflation is, this time next year or this time in like 9 or 10 months. But yeah, it's definitely a lot higher than the Fed realized. And now the thing is, central banks can't admit when they've made a mistake because they always need to maintain that aura of being in control. So obviously the Fed know they've messed up. Inflation is way too high. They're going to do nothing about it. Well, I mean, they'll start to slowly do something about it, but they're prioritizing growth and the labor market recovery over inflation at the moment. And also they're prioritizing the stability of financial markets over inflation as well. Yeah. So they'll continue to do that, I think.
Yeah, definitely. And going back to, hawkishness, like signs of hawkishness back in June, obviously we had this big green candle on the US dollar. And then last week, we didn't really get that same, I don't know how much is already priced in for the US dollar in terms of like, it might need to actually see a policy change, like, that sort of percentage change up from, 0.1% or whatever it is for, interest rates at the moment. It's just, they might actually need to see it actually physically happen. Otherwise they might not believe it's going to happen. They've kind of priced it in.
That's a good point because this market's now pricing a good possibility of the first hike coming next September. But like you say, it's a long way away still. So
well, 2023, couldn't it? It's like it could be.
It could be
pushed out. Yeah.
I mean, I think you got to think that the bias is towards further upside for the dollar against like the euro, the yen. Because like the BOJ, the ECB,
So what are you going to say? Well, so the ECB obviously got some news out this week as well. It's very central bank heavy again, isn't it? It's like a second week in a row.
So this week, this is a central bank heavy week. We've got a lot of Fed speak today, tomorrow, Wednesday.
German election that just happened.
German elections, we just had the German elections. It looks like Merkel's party, the CSU, they got just over 25% of the vote, but they're not the biggest party. The biggest party is the SPD, a bit more left-leaning. They're like the centre-left as opposed to the centre-right. But then you also had the Greens doing quite well, and then another party, the FDP, doing quite well. So pretty much the elections went as expected. I think one of the factors was that the left-leaning parties didn't get a majority, so they can't form a left-wing government coalition. Yeah. So there's going to be a coalition which has a bit of centre-left and a bit of centre-right. Probably it's going to be led by the biggest party, the SPD, but we're just going to have to wait and see. I mean, these German coalition negotiations take a very, very long time. Yeah. So we're just going to have to wait and see. But the people that are going to be the kingmakers is going to be the Green Party and the FDP, because whoever they side with is going to have the majority. Okay, cool. But yeah, I mean, I guess it's for the European Union and the euro itself. Yeah. You know, where you had like 16 years of a ruling party, I guess, well, one chancellor at least, then I wonder if, the sort of stability of Europe is in question. Do you think so? Or do you think Germany's still, it's always been federalized. It's always like been lots of, it's hard to sort of say how stable they're going to be going forward, but I'd imagine it's going to be stable. This election result definitely sort of points towards more stability. It seems to. Yeah, I mean, whichever, when you look at all the sort of feasible coalitions that there could be, it's going to have a strong pro-EU bias to it. Yeah. There's the potential that some coalitions might be a little bit more fiscally austere. What's the word? Fiscal, like more, conservative with the spending. Yeah. But yeah, the stability of the EU, I think, isn't really in question. So, yeah, I mean, Euro hasn't really reacted, as you can see. Yeah, I just think the Euro, this is like a weekly chart going back to 2017? Yeah. It's kind of I don't trade the Forex at the moment. It just seems to be like a real nothing trade. It's not doing anything. I don't know how anyone can make any money. A lot of the big moves happened sort of last summer, didn't they? Yeah. The big move to the north in euro dollar. But ECB this week, though, should be interesting. We've got their Sintra event, their annual get together in Portugal. Yeah. And we're just looking for any hints about QE policy, because the PEP is going to expire in March, which is their pandemic emergency purchase program. So, yeah, are we going to see any decision or any hints what they might do with that? I think they just come out with a new one, don't they? They might have a green bond type of lean, like they might be going more green, but I think the amount of money is probably a similar amount of money being pushed. Yeah, I mean, they actually had a QE program anyway. Draghi, his parting blow before he left was to do 20 billion a month in something called the asset purchase program. Yeah. So they've actually got two QE programs running at the moment. So when the PEP expires, they could just increase the size of Draghi's one that predated the pandemic. And that's kind of similar to what FOMC was saying. Basically, we might taper this amount, but we're still pushing money in, we're still pushing this money around 100 odd, whatever it is a month. It's just crazy amounts. 120 billion, the Fed. Yeah, exactly. But even if they taper, they'll still be pushing money in. Right. So we talked about the euro. We talked about oil, Aussie dollar kind of going sideways on the hourly. RBA theme, just waiting. Euro versus the pound is, what's going on here? I'm selling the euro pound. There you go. That's working out. Zoom in a little bit. I can't quite differentiate the. All right, so it's an hourly chart. So yeah, I was. Oh, there we go. There, yeah. So I'm looking for the euro to weaken against the pound, because the pound was pretty strong last week after Bank of England. Yes. Yeah, Bank of England was quite hawkish, sort of bringing forward those expectations for a hike as soon as February. Yeah. So that would be good. Pound versus US dollar.
I've got that looking like it wants to go higher. We had a balance area, a dip below, a big impulsive move on, what was that? Friday, was that? Yeah, probably. And then like a pullback back into that balance area. And I'm just looking for this to go higher and the euro pound to go lower. So that's working out by the looks of it. Dollar, we said, FTSE. That's kind of, I really thought the weekly chart was going to be ending a little bit higher, but we ended up in this range. But the FTSE's, it looks like it wants to go higher. It still looks like it wants to take out, these 2020, 2019 highs. So just a bit of a pause at the moment. But other than disruptions from oil and gas, any other sort of UK, I don't think there's been anything else from the UK that was like either doom or positive.
Yeah, I mean, one of the problems for the FTSE is you don't want the pound to be too strong. And the pound's been doing, like you just showed against the euro, it's been doing quite well recently. Hawkish Bank of England. But yeah, otherwise, I mean, the FTSE's a weird one because a lot of the income made by the FTSE companies is actually made globally anyway.
Yeah.
So
mining, oil. Yeah. You thought they were doing quite well. No trade deal from Biden to Boris Johnson yet, but we did have that little shuffle around in the cabinet. So maybe, is it Truss?
Truss, she's meant to be a bit more competent. Yeah,
in terms of foreign policy and stuff. So maybe she can bend Biden's arm and help out there. Gold. What's going on with gold? That had a bit of a pop on the Evergrande, but then quickly reversed on Thursday.
Yeah.
So no safe haven.
It's not a great environment for gold really at the moment because we've seen bond yields rising in wake of not just the hawkish Fed, but also the hawkish Bank of England. I'm just looking at real yields, US 10-year real yields or 10-year tips. They were sort of stuck below minus 1% for like weeks. But yeah, in the last sort of week, they've shot higher by about 15 basis points. Currently at minus 0.85%. That's not good for gold. That increases the gold and real yields have a pretty strong negative correlation. And then obviously the dollar's looking, I mean, it's probing highs. So that's also not good for gold. No.
And I guess the higher this dollar, if it does pop out above, say, some of these swing highs, then that's not good for commodities. I noticed, I haven't got the chart now, but I noticed that like copper was like teetering on the edge of like falling down. I don't know if it has, but I'd imagine
it was lower this morning.
Okay, yeah. So there's that big run up, then the sort of spike high, and then the sort of sideways movement. And if it's gone a bit lower, then it looks like there's a big volume gap for it to fill in. A lot of commodities like the sort of durable materials, they seem to be coming off. And I guess like with China, just like regulating markets and stuff, or just pushing metals into the market from their stores, then they're not hoarding as they were before. They're trying to regulate these prices, aren't they?
Yeah.
All right. I think we've gone through all the majors and we put the world to rights. So that's pretty cool.
I think we have.
That's a good one.
Nice, mate. Speak soon then.
Yeah. Have a great week and I'll catch you
as
later.
well.
Right.
Yeah. Bye.